Welcome back to TechEyeSpy, the channel where markets get unmasked and the future gets dissected. Today, we're lighting a match under a company that's genetically re-engineering your smoke, your brew, and maybe even your medicine cabinet. This is 22nd Century Group, listed on the NASDAQ under XXII. Now, it's a name that sounds like science fiction, but it's been making real-world plays in plant biotech. From low-nicotine cigarettes cleared by the FDA to genetically tweaked hemp and next-gen hops, this firm is betting big on nature's chemistry. But can it weather the financial storms? Or are its ambitions just smoke and mirrors? Strap in. We're diving into a full SWOT analysis, breaking down the strengths, weaknesses, opportunities, and threats behind 22nd century's high-stakes biotech gamble. Let's get into it. What makes 22nd Century Group intriguing isn't just the science. It's the regulatory edge they've managed to carve out in a world full of red tape and tobacco. Giants. Most companies in this space struggle for years to even get noticed by the FDA. 22nd Century? They walked into the room and walked out with something historic: authorization to market their VLN cigarettes as a modified risk tobacco product. That's not just a feather in the cap. It's an entire peacock. It gives them a foothold in a market that's been frozen in place for decades. They're not trying to replace nicotine with another vice. They're offering a version of cigarettes that dramatically lowers the addictive grip, about 95% less nicotine, and in theory, makes it easier for people to step away. That's disruptive, especially when public health policy starts aligning with your business model. One executive said, "The goal isn't to eliminate choice, it's to offer a better one. Whether that works in practice or not, that kind of positioning opens doors." But tobacco is only part of the play. Underneath the surface, they're building out a biotech infrastructure that spans hemp and hops, two plants with global cultural roots and emerging medical relevance. Their hemp line isn't just CBD in a bottle. It's molecular-level manipulation aimed at creating high-value compounds for pharmaceutical use. The same goes for hops, where they're developing proprietary strains that promise not just better flavor but functional benefits as well. The IP portfolio here is no joke. We're talking about gene editing technology, plant transformation techniques, and a pipeline of crops designed from the molecule up. In an era where companies live and die by their patents, 22nd Century has built a fortress. And behind that fortress is a business model that isn't shackled to just one product. It's diversified by design. Then there's timing. As governments around the world tighten regulations on nicotine levels, 22nd Century isn't scrambling to adapt. They're already there, positioned to benefit from the shift instead of suffering through it. That's a rare seat at the table, especially when everyone else is still fighting to get in the room. But here's where the glow dims. For all the promise in its science and strategy, 22nd Century Group has a history that reads like a biotech roller coaster, complete with cash burn, dilution, and pivots that have spooked more than a few investors. This is a company that's been through boardroom reshuffles, debt restructuring, and the kind of market skepticism that makes raising capital an uphill slog. Innovation's expensive, and they've been burning fuel fast, sometimes faster than they can refuel. Their flagship product, the low-nicotine VLN cigarette, has the FDA's blessing, yes, but what it doesn't have is mass adoption. The big tobacco players aren't exactly rushing to license the tech, and the public hasn't stampeded toward the product either. There's a difference between regulatory approval and market success, and 22nd Century is still stuck in that uncomfortable in-between. And here's the philosophical itch. When the government grants exclusive labeling rights, paves regulatory pathways, and starts floating policies that align almost perfectly with one company's product line, it raises eyebrows. Is it public health stewardship, or is it selective support? The FDA's MRTP label is not easy to get, and the fact that 22nd Century secured it while larger, more powerful firms didn't, well, it suggests either remarkable innovation or remarkable timing. You decide. Some investors see that as a sign of clever alignment. Others whisper state favoritism. After all, if regulations start changing to mandate lower nicotine in all cigarettes, who benefits most? The one with the technology already approved. That's not necessarily sinister, but it's not exactly neutral either. There's also the fragmentation issue. Hemp, hops, tobacco. It's diversification, yes, but it's also a lack of focus. Each vertical requires its own marketing, research, and compliance infrastructure. For a company that's already thin on cash and juggling investor patience, it starts to look like a circus act. Too many plates spinning, and not enough hands to keep them going. Now here's where it gets interesting. The road ahead, though risky, isn't short on opportunity. If governments around the world keep inching toward nicotine caps in combustible cigarettes, and the trend is picking up speed, then 22nd Century becomes something of a gatekeeper. They're not selling dreams, they're selling compliance. That's powerful. In a post-nicotine era, the company's technology might not just be useful, it might be necessary. And with their VLN product already FDA cleared, they've got a first-mover advantage in a race most people didn't know had started. They're not building factories to crank out billions of packs overnight. No, the smarter play here is licensing. If Big Tobacco decides it's cheaper to rent the technology than build it themselves, 22nd Century becomes a toll booth on the road to regulatory approval. But tobacco isn't the only card they're holding. There's a bigger game in plant biotech, and they've already planted seeds in hemp and hops. The cannabis space is evolving rapidly, with a growing demand for specific cannabinoids, not just THC or CBD, but rarer ones like CBG and CBN. This isn't recreational weed. This is pharmaceutical-grade formulation. Companies that can precision grow plants with consistent compound profiles. Those are the future suppliers of a multi-billion-dollar therapeutics market. Then there's hops. Sounds quaint, right? Just something for the beer crowd. But the real edge is in functional beverage ingredients, compounds that could support sleep, stress relief, or mood balance, all while sitting comfortably on grocery store shelves. Think of a world where your evening drink isn't just relaxing. It's bioengineered to help you recover faster, sleep deeper, or think sharper. 22nd Century is already positioning itself for that. And here's the wild card: synthetic biology. They may not be front and center in that space yet, but their experience with gene editing, plant chemistry, and IP positioning makes them a sleeper candidate for collaboration or acquisition. If a bigger biotech player wants turnkey access to regulated plant systems, 22nd Century might be the shortest path to that door. So yes, the financials are shaky. The path is narrow. But if the wind shifts in their favor, and it just might, they're standing at the intersection of health policy, biotech, and next-gen consumer goods. And that's not a bad place to be, but for every opportunity, there's a shadow waiting to stretch. And 22nd Century Group is no stranger to long shadows. The most obvious threat? Cash. They need it badly. The kind of biotech they're running, gene editing, regulatory navigation, crop engineering, it's capital intensive. And their history of dilution hasn't exactly won them long-term investor trust. At some point, the market starts to tune out the promise if the burn never slows. There's also the elephant in the boardroom: Big Tobacco. These are trillion-dollar titans with global distribution, entrenched lobbying arms, and more lawyers than most cities have doctors. If nicotine caps become law, and if 22nd Century holds the IP for compliance, sure, they might license it. But they also might challenge it, replicate it, or simply swamp the playing field with alternatives. Not every fight gets won with a patent. Then there's market apathy. Just because something's good for you doesn't mean people want it. The low-nicotine VLN line has FDA backing, but culturally, smoking is already in decline. And among those still lighting up, there's little demand for a cigarette that offers less of the one thing they're hooked on. It's a tough, behavioral sell. Changing minds can take longer than changing molecules. Thanks for watching this episode of TechEyeSpy. If you got something out of it, insight, curiosity, maybe just a better lens on risk. Do us a favor. Like the video, subscribe to the channel, and drop a comment with the next stock or sector you want us to decode. This channel is for the thinkers, the skeptics, the future watchers. If that's you, you're in the right place. See you in the next one. So, where does that leave us? 22nd Century Group is not your average small-cap gamble. It's a company built on ambition, backed by science, but shadowed by volatility. It's carving out a niche in a tightly regulated space, and in a world where tobacco might be legislated into compliance. This company is trying to sell the keys to the new rules. But this isn't a stock for everyone. If you're a value investor, you walk. The balance sheet's a war zone, the fundamentals are shaky, the margins microscopic, and dilution is always lurking around the corner. But if you're a high-risk biotech speculator, if you look at early-stage companies like lottery tickets with lab coats, then this one might catch your eye. Especially if you believe the next decade brings tighter nicotine laws, explosive cannabinoid regulation, or a boom in functional, bioengineered consumer goods. It's a moonshot. Plain and simple. And moonshots don't come with parachutes. You buy in knowing the company could crash, or it could be acquired, or, if it gets lucky, revenue could start flowing from multiple verticals at once, turning the tide fast. So who would buy this? Someone with patience. Someone with a stomach for risk. Someone who sees biotech not just as medicine, but as agriculture, a regulation and consumer behavior converging in one chaotic, high-stakes arena. In the end, 22nd Century Group is a question mark. But in the right hands, under the right policy winds, it could become an answer. Thanks for tuning in to TechEyeSpy. If you like the way we break these down, subscribe, share, and tell the algorithm you want more. Until next time, keep your eyes open and your bets calculated. Thanks for watching this episode of TechEyeSpy. If you got something out of it, insight, curiosity, maybe just a better lens on risk, do us a favor. Like the video, subscribe to the channel, and drop a comment with the next stock or sector you want us to decode. This channel is for the thinkers, the skeptics, the future watchers. If that's you, you're in the right place. See you in the next one.